Okay, you guys good to go? Whoever's in here, three of you. Okay. So I just wanted to show you guys the little continuation thing I use. It's pretty much the same thing that I use for the reversal. It's just got a few tweaks, um, and it's kind of conflicting with the other strategy, but there's some key differences that can kind of isolate it for you, I guess. Um, anyway, same thing. There's like a trade flow, so this is basically for a continuation or a trend. So you want to have a higher time frame draw on liquidity. You want to establish that you're trending, and then for the H4 open, we'll use it the same way, except you're gonna long above the H4 open and you're gonna short below it. So if I'll show you examples. The prior 90-minute cycle can't be swept, so we can't have like if we're gonna go long, I don't want to see a sweep of the previous 90-minute cycle. I just want it to all kind of like trend in order. Lows remained intact. And then if we're shorting, I want the highs to remain intact. I don't want to have any type of manipulation there on a 90-minute cycle if we're trending. Um, the H1, so that's going to be the key indicator for this continuation is the H1 open. So we'll be above the H4 open. We'll be below the H1 open looking for a long. I'll show you a schematic explaining that. And then for this one, I like to see a 10-minute cycle sweep rather than a 30. You can have a 30, but usually the stronger trends won't really manipulate the 30-minute cycle. They'll just keep stacking on top of each other, and then you can just get in with a 10-minute cycle sweep. Entry is exactly the same. You want to see the turtle soup, inversion, change in the state of delivery, breaker, fair value gap, exactly the same as the reversal. So let's go into some pictures because it's easier to see. So the schematic is sort of like this, okay? So like we have say we miss the reversal up here. Like our initial entry, like we're trying to get short, whatever, we get to the computer late or we miss it, but you see that it happened. If it's a strong trend, you might not get back above 6 a.m. to trigger another reversal. So in that case, you can just hop on the continuation, but you need to be above an hourly open to get short. So for here, I marked out the 9 a.m. open just for an example. We have the higher time frame draw down below price, and we've established that we're trending. And then we enter the same way. So we want to be above 9 a.m. but below 6 a.m. because we're trending. And then we have the same exact entry. So the turtle soup, the inversion, and the CSD, which would confirm the entry, for me at least. And then you can stack some orders in the fair value gap or a breaker or however you like to do that. It's up to you guys. And then you look for a continuation down towards your higher time frame draw. Whatever that might be, you know, that can be whatever you want it to be. But the main point is that like you miss your initial reversal or it doesn't give you a good opportunity to get in above the 4-hour price like I like to see. And then all you do is use the hourly chart as the same thing, but you want to be down below the open, down below that 4-hour open. Does that sort of make sense on the schematic, or is it just confusing? Okay. Yeah, it's pretty simple. Same thing here. Going bullish. Same schematic, just reversed. I don't need to go into it, but we have our initial reversal down below 10 a.m. and then price just remains really bullish and doesn't give like myself an opportunity to get in with the current reversal strategy. So then I'll use the 11 a.m. candle. I want to be below it, see the manipulation of a 10-minute cycle, and then the reversal sequence that I like to see, and continue towards the higher time frame draw. So if we look at a couple models, look at a couple live examples. Let's do continuation example 1. So this was from earlier in the week. All right, so this is like a zoomed out version I wanted to show you. So we took sell side liquidity. We have a nice reversal below 10 a.m. that, we could have gotten in there. And then we have price kind of trend, and then we trend above 10 a.m. And then we're at the 12 p.m. lunchtime open. But we still have a draw on liquidity up above price that we haven't met. Okay, so I'm not really expecting it to get back below 10 a.m. to give me another entry long. So what you can do to still meet the Asia high and meet your draw on liquidity is just get in on an hourly open, such as this here with the 12 p.m. open. And then the next schematic here, the next picture, we'll zoom in on that. So this is going to be the 15 second. So we have the 12 p.m. open, and then we drop down below the open. That's when you want to be looking for a long, but we're still above the 10 a.m. price. Okay, so we're looking for continuation. We have a 10-minute turtle soup here, but we hold the 30-minute cycle low. Okay, the 30-minute cycle low is down there somewhere. So we hold that, but we manipulate the 10. And then on the 15 second, we form a really nice reversal pattern. Okay, we have the fair value gap, inverted, the CSD, breaker, and then a continuation fair value gap up here that you can add into. And then price just keeps trending upwards. Any questions on this particular one? Yeah. Okay, so a continuation from, show me, or tell me where you're talking about. Okay, so around 11, possibly, but the thing is you want to be trending it. It's like when I want to use this, I want to be trending. So for me to be trending, I need to be above 10 a.m. It's kind of the opposite of our other one. So I want to be up above 10 a.m. open and really have like a nice trend established. If I'm in here at 11 a.m., to me, that's like just chopping around. But maybe like if you miss this and you still want to get a reversal in below 10 a.m. price, like maybe that's something you want to get in on if you're going down into the lower time frames or using 10-minute cycles, because you do sweep that and then you CSD, you retrace but don't take the low, and then it continues. So I mean, like, yeah. Anything else on this 15 second? And okay, continuation with news, schematic, news. Okay, let's do this one. So a lot of times this stuff will happen with news attached. Like this week we had the 8:30 news. It kind of shoots price up above the open and doesn't really give you a chance, okay? As far as like, but when I'm talking like it doesn't give you a chance, I'm speaking to like myself in regards to like what I like to see to get a reversal. You guys might enter however you want. But for me, like I said, we need to be below 6 a.m. for me to get a reversal. So in this case, we shoot above, and then we start to trend, okay? We start to trend towards a draw in liquidity, whether it being this blue line there or the fair value gap up here, which I believe is a daily. And the same thing happens. So you wait till 9 a.m., okay? Wait for a pullback. You get down below 9 a.m. open. You take a 10-minute cycle low, but you hold the 30-minute cycle and you hold the 90-minute, and you form the reversal here, okay? So you can do it on the 1 minute. So that would be it on the 1 minute, the CSD, and then the entry if you want. But in this particular case, you'd probably be down the 15-second because that's above the open. I want to be catching the reversals below the open. So if you zoom in on the 15-second, the turtle soup, we're just zoomed in. So the turtle soup, we have the inversion, the CISD, the breaker, and then we have a fair value gap and a couple other fair value gaps that don't get tested. And then we just continue up. So the main thing for me is like, you want to be above 6 a.m. for this to continue, but you want to be below the hourly. So above the 4 hour, but below the hourly if you're going to go long, below the 4 hour, and above the hourly open if you're going to go short. And for the entries, like, this is what I use. You guys can use whatever you want. It all works. You know what I mean? Like if you're playing like a flag or whatnot, you know, you kind of have the flag and you break out, you can take a long. If you look at specific order block, CSD type stuff, if you look at, you know, fair value gaps or whatnot, and then you get above, then you can trade above that gap. You can use whatever you want. The key point is you want to be above the 4 hour open trending, but below the next hourly open or whichever hour open. It could be 7 a.m., it could be 8 a.m., it could be 9 a.m., as long as it's before 10 a.m., because then a new cycle starts for me. And that's pretty much it as far as like what I've wanted to show you guys. I mean, this is my secondary thing, right? Like I'm looking for the reversals like I showed you guys last week. That's my primary strategy. Like this would be a secondary thing for me if I'm not able to get in. Like this week we had several scenarios like this where we had a continuation or like sort of a trendy day. It just gives you another option to get in. That's all. Any questions on this specific chart or anything else? Yeah, it's pretty, like you said, 10 a.m. So like if this is 10 a.m. instead of 6, you know, we're well above 10 a.m. open, and we've established that we're trending in our own head, however you get to that conclusion, and then you have a target above price. So if you've established all that in your mind, then you're looking at an hourly open and you want to be below the hourly open to catch a reversal the same way we'd catch a reversal, like below the 6 a.m. open. Like if we're going to take a long below the 6 a.m. open, we want to see that same thing happen down here, just below the hourly open. So that's not like a super strict condition. It's just if it's trending hard, like if the environment is trending hard, the 30-minute lows will remain intact. Okay, and they'll just stack like this. Like you'll just have box after box after box, and it might not give you a chance, you know? Like you might not get a chance if I'm saying like, oh, I gotta have a 30-minute low swept. If it's trending hard, you might not even get that chance. So you want to use the 10-minute cycles in that scenario because we're trending and price is moving in one direction. So I'm not going to be expecting a 30-minute low to be taken out. If it does and it still presents my model and everything else aligns, that's fine, I'll take it. But the best trending environments just trend like that. You know, they don't really come up, come back down, take a low, come up, come back down, take a low, come up. They'll kind of just go, okay? It's rare. It's like it's way less likely to happen in my mind than a day where you get a couple nice reversals. But you do have those days where you just go, 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 and it's like a slow grind all the way to the high or all the way to the low. And those days are hard to trade. Those days for me, at least, are really hard to trade because I'm not just like buying and letting it go. I'm always looking for a reversal. So in this scenario, you can still jump on board the trend and still stay true to your reversal pattern of entry. But the 30-minute cycle sweep may or may not happen. It's stronger trend if it doesn't happen in my mind. Does that answer your question? Yeah, in my mind, in my eyes, yeah. Any other questions on this specifically? I mean, that's pretty much all I have, guys, honestly. Like, if you guys want to go over a couple other things or whatever you guys want to present, or if there's any other questions regarding anything throughout the week that happened, if somebody else wants to show their chart, like, I'm down for whatever. I just wanted to quickly go over like a continuation model. And that's all I have, to be honest. Like, I don't do anything else. It's the only thing I trade. It gets repetitive and boring, but yeah. Yeah, for sure. You'll always have that. You know what I mean? Like, you'll not always have it, but you will. That's the hardest thing to get over. Is just sticking to the simplicity of your own strategy and not deviating from it. Like, for me, I have to have super strict rules. You know, I have to stay super disciplined in the rules, or else I'm just gonna go crazy and go off a trail and take way too many trades. I'm not. That's just my personality. I have to stay like super strict on myself, or else I'll deviate and end up like I'll make money and then I'll take two more trades and lose money, and then I'm break even though I had a nice trade. It's just staying out of the market is one of the best things you can do. You can learn to do. Uh huh. Oh yeah. Yeah. Yeah, for sure. For sure. Not that good. Go ahead. Go ahead. Go ahead. I was just saying not that good. Um, yeah. 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 It happens.